Our last question for the prelim exam was the question on the fixed assets for 15 marks. This was a very straightforward question. You are presented with a fixed assets note for Bojan traders for the financial year ended on 30 June 2014. Calculate the amounts denoted by A to F. So we've got a couple of missing amounts here and we need to calculate them. Actually, there's only up to E. Right, and that is for 15 marks, and they tell us to show all the workings. Yeah, they don't even have to tell you that. Please always show all your workings so that you can get part marks. Vehicles are depreciated at 20% on the straight line method. Again, straight line method means cost multiplied by my rate. Right, or if they give you a useful life, it means cost divided by the useful life. Alternatively to that, you could have been given the reducing balance method, which would have been carrying amount times the rate, or carrying amount divided by the useful life. Okay, and that's that. And there we go. So now we're given these figures and we know that we have to start with figure A. So important to be able to do this, you need to understand the note. You need to know that these values here is basically my opening balance. I'm just going to write the OB for opening balance. And these values here are basically my closing balance. So the difference between the opening balance cost and the closing balance cost is any additions or disposals that you would have made during the year. The difference between the opening balance accumulated depreciation and the closing balance accumulated depreciation is the depreciation on all the vehicles during the year, as well as the removal of depreciation because of any assets sold. You remember that the accumulated depreciation account looks something like this. So you have your opening balance, there we go, balance brought down, you'd have your depreciation during the year, you would have your balance carried down at the end of the year, and then here if you sold any asset you would remove the depreciation to that asset that was sold and you'll take it to asset disposal. Your cost account looks something like this. So for example, vehicles or equipment, you'll have a cost account, you'll have your opening balance because it's an asset. Remember, accumulated depreciation is a negative asset, that's why the opening balance is on the credit side, increases there, decreases there. The asset is however an asset, so it increases on the debit side, decrease on the credit side. That means the opening balance is on the debit side. If I purchase any vehicles during the year, that's going to increase the cost of the vehicles. If I sell any vehicles, I need to take that to asset disposal, and that will again decrease the value of my vehicles, or the cost of my vehicles rather. And then we'll have our closing balance at the end, which is basically the difference between the opening balance plus the additions minus the disposals. Alright, so that is really what the note does in short. The note shows the opening balance on accumulated depreciation, which would be this equivalent of amount here, 132,000. Okay, that would be my 132. The closing balance is 238,500, so that would be 238,500. Asset disposal, we didn't dispose of any vehicles, that's why that one is a blank, so that's going to be a blank. We know the depreciation, we do not know the depreciation, that is amount number C. So okay, we'll get to the depreciation. We can easily calculate the depreciation because it's the only missing amount, so we know how to calculate amount number C, but we're not there yet. Let's quickly look at the vehicles. We know the opening cost for vehicles is amount number A, that's the amount we're looking for. We know the closing cost for vehicles is 720,000, so that's that amount there. We also know that there was additions during the year of 250,000, and we know that there was no asset disposals for vehicles specifically, so we can work out amount number A. So amount number A is therefore going to be simply the difference. We add up our debits, that's 250, we add up our credits, that's 720, and we know that the remainder is going to be the amount for A. So we can say 720,000, which is the closing cost, minus the opening cost, which is 250,000. Please don't use that abbreviation, I'm sorry I'm teaching you that. 720,000 minus 250,000, and that will give you 470,000 as the cost. So this is then 470. Once we've got that, we can calculate amount B pretty easily. The carrying amount is always the cost minus the accumulated depreciation. So B is going to be 470,000. That's the cost minus the accumulated depreciation, which is 132,000, and that gives me a carrying value of, if you punch that in your calculator, you're going to get 338,000. So very easy so far. Amount number C, we've drawn up our T account and we've put in the opening balance of 132, we've put in the closing balance of 238. Reason why we can put the closing balance there is because that's everything above the line is the balance carried down, right? We can draw our total lines there. At the end of the day, the new period will put the balance brought down again below the line. Okay, but the balance carried down for the new month at the end of the period is above the line, the balance brought down is below the line. Right, so you'll see this 238,500 is still a credit at the end of the day, but above the line it's going to be on the debit side because it's the balance carried down. Right, so we can add our debits and credits, no disposal there, so both sides need to add up to the bigger amount, 238,5 on both sides, and this is then our missing amount. 238.5 minus 132 is going to give us our missing amount, and that makes 100% sense. Only difference between opening accumulated depreciation and closing accumulated depreciation is the depreciation during the year because there was no asset disposal. Alright, so that is 238,500 minus 132,000, and that gives me an amount of 106,500. So this was also money for jam. Mahala. Right, then we've got equipment, which is very simple as well. Again, very easy. Amount number D. We've got our cost, we've got our carrying value. We know carrying value is equal to cost minus accumulated depreciation. So if we have the cost and we have the carrying value, we can easily calculate the missing figure of accumulated depreciation because we only have one unknown. Alright, so carrying value equals cost minus accumulated depreciation. So accumulated depreciation is the figure that we need here. So if we get that on its own, we add that to that side and we take the carrying value this side, then we're left with accumulated depreciation is cost minus carrying value. Alright, so if we do that, we've got 176,000 minus the carrying value of 96,200. That gives me an answer of 79,800 as the accumulated depreciation. You can check yourself, put 79.8 in here, take 176 minus 79.8 and you should get to the 96,200. Right, then the last one, number E, it asks us what is the disposals amount. This is the disposals at cost price. This is the additions at cost price. They don't have to tell you that. You need to know that. Sorry, I do apologize. This is the disposals is always at the carrying value, and the additions, carrying value, and the additions is always at the cost price. So please remember that additions at the cost price, disposals at the carrying value. That means that amount number E, we can calculate that as follows. We know that the carrying value for equipment is 96,200 at the beginning of the year, 1st of July. Then there was no additions and there was a disposal at the carrying value. Okay, so we're dealing with got the carrying value here. This would be at the carrying value. The depreciation would also reduce the carrying value, and then we end up with our closing carrying value. So we know the following: 96,200 minus E minus the depreciation of 20,050 is equal to 54,150. Alright, so we've got the carrying value at the start plus or minus all the movements gives you the carrying value at the end, and that's exactly what we've done there. And now we can just find E as the missing figure, and then you get E all by itself. So we add E on both sides, and we've got minus 54 on both sides, minus 96,200 minus 20,050 minus 54,150 is equal to E. Therefore E is going to be 22,000 Rand. That was question 8. Very easy. You just had to know the format of your fixed asset note. You know that the know your T accounts as well. That would also help. The only things that could influence the movement on the cost and the accumulated depreciation is additions on the cost side and disposals on the cost side. On the depreciation, accumulated depreciation account, it is disposals and depreciation. Okay, and then also the carrying value, the movement in the carrying value is represented by these three movements together. So if you take the opening carrying value, you add or subtract these three movements, you're going to get to your closing carrying value. Great.